Holy tamale, guys, I am completely out of words because Tesla just reported their best earnings report ever. And in today's video, I'll be going line by line to explain this earnings report to you guys and tell you why it is such an amazing earnings report and why I believe Tesla stock is a buy right now. In the past few months, I've made Tesla stock the biggest position in my portfolio, and this earnings report just proves why this company is so amazing. Anyways, if you do enjoy this video, don't forget to drop a like, and if you haven't already, please consider subscribing. And with that said, let's get straight into the earnings report. All right, so before getting into the report, the first thing I want to show you here is Tesla stock is up 5.4% after hours. This is barely above where they traded yesterday. If we look at a 5-day chart, it's really not that big of a move, but it is a pretty good move regardless. Anyways, let's now get straight into their Q1 2022 update. Starting off with the summary and the highlights here, they say the first quarter of 2022 was another record quarter for Tesla by several measures such as revenue, vehicle deliveries, operating profit, and an operating margin of over 19%. Our outstanding recourse debt has fallen below $100 million at the end of Q1. Public interest in a sustainable future continues to rise, and we remain focused on growing as fast as is reasonably possible. All right, so in terms of their cash, they say they have free cash flow of $2.2 billion in Q1, and then they have total debt, excluding vehicle and energy product financing, under $100 million. That is very little debt, guys, and as we'll see in a minute, their balance sheet is so clean, it's amazing. So yeah, let's just get straight into the financial summary here. So the first thing we can see is the automotive revenue line, and they produced $16.86 billion, up 87% year over year. Or for their total revenue, this was at $18.75 billion, and this was up 81% year over year. And I just want to emphasize that is the reason why Tesla trades at such a high valuation, because they are growing their revenues above 80% per year. Now, in terms of their automotive gross margin, we can see that it hit 32.9%, well above 30%. So now it's clear to see that Tesla's margins are continuing to rise and they're becoming more and more profitable. And we can actually see that they did have a lot more regulatory credits this quarter, but even if we take out those regulatory credits, the calculation comes to 30% for an automotive gross margin, which is still very solid and it's industry leading. In terms of the entire company, however, they do have a 29.1% gross margin, and this was up from Q4 2021 of 27.4%. So I love to see this increasing trend when it comes to their gross margin. Next up, we have their operating expenses, and take a look at this. They have $1.86 billion in operating expenses, year-over-year growth of 15%. So if we compare this to the revenue growing 81%, that is insane, guys. That means their margins are expanding massively, and that's why they're becoming so profitable. And we can even compare these operating expenses to Q4 of 2021 of $2.2 billion. So their operating expenses actually dropped quarter over quarter. Meanwhile, their revenue actually grew by about $1 billion. As a result, Tesla was able to achieve a record operating margin this quarter of 19.2%, never ever seen by Tesla before. So it grew from 14.7% to 19.2%. That is ridiculous. Then of course, coming down to net income. So GAAP net income came in at $3.3 billion or $2.86 per share. And then non-GAAP net income came in at $3.7 billion or $3.22 per share. And I believe that analysts were projecting around $2.50 or something like that. So Tesla beat like a crazy amount. And here we can just see they grew EPS 246% year over year. In the same quarter last year, they had 93 cents of EPS. This quarter, they had $3.22. Guys, this is unbelievable growth. And that is again why Tesla trades at a high valuation. Now, based on these EPS numbers, guys, I want to calculate Tesla's valuation now. So what I'm going to do is pull open my calculator, assume that they're trading at a stock price of $1,030 per share. Then if we divide by all of the GAAP EPS down here for the past 4 quarters, we come to a trailing GAAP PE ratio of 140. Now, yes, of course, a trailing PE ratio of 140 is pretty high, but if we take a look at their earnings growth rate, I mean, 633% year over year, that is insane, and it's definitely going to continue increasing very quickly over the next year. So their forward PE is probably well below 100 now. Then if we do the same for all of the non-GAAP numbers, right below the GAAP EPS here, we actually come to a trailing PE ratio of 113.5, which is the lowest that Tesla has ever seen. And again, I do just want to emphasize they grew EPS 246% year over year. So for 113 trailing PE ratio and that much EPS growth, I mean, this is pretty reasonable. Like, it seems undervalued. I apologize if I'm acting too much like a Tesla fanboy, but these results are undeniably amazing. Now, if we check out some of the factors that affected revenue and profitability, here we can see revenue grew 81% year over year because mainly of growth in vehicle deliveries, increased average selling price per vehicle, and then growth in other parts of the business, so insurance, and then they also have their energy business. And then these are some of the factors that affected profitability. So obviously growth in vehicle deliveries, increased average selling price leads to higher margins and therefore profitability, reduced costs of goods sold per vehicle despite inflationary pressures. And I just want to highlight this point. It's very important because it shows that Tesla is continually innovating and driving their costs down per vehicle, which is going to naturally improve their margins over time, even if their average selling price doesn't increase. And the fact that inflation is roaring so high and they were still able to reduce their cost of goods sold per vehicle, that is insane. Now, of course, they had lower stock-based compensation expense from Elon's 2018 compensation package not being this quarter. They also had an increase in regulatory credit sales, so that does affect profitability. It's basically straight profit. And then, of course, some negatives were rising raw material costs, commodity logistics, and expedite costs, and then the increase in operating expenses. But in terms of rising costs from inflation and then the expediting costs, this is actually probably going to go down in the future, or at least stay constant, because Tesla has opened up their Berlin factory, so they don't have to ship cars over to Europe anymore. And then they also have the Austin Gigafactory, so that is definitely going to drive down costs even further. Finally, they ended the quarter with $18 billion in cash and cash equivalents in Q1, with less than $0.1 billion in debt, so that's like the cleanest balance sheet. Now, in their operational summary, they also highlight the deliveries and production, but these results came out a few weeks ago, so I'm not going to get into this in detail, but basically they delivered 310,000 vehicles in the quarter. Now we can see here solar deployed was actually down 48% in the quarter, but then storage deployed was actually up 90%, store and service fleet locations up 20%, mobile service fleet up 35%, and then supercharger stations up to 3,724, up 38% year over year, and then 33,657 supercharger connectors, up 37%. Now here they have a slide on their vehicle capacity for every factory that they have in the world. So they have the California, the Fremont factory, Shanghai, Berlin, and Texas, which are in their early ramp stages. But these numbers, like for Shanghai, 450,000 or more, this is completely out to lunch because Tesla can produce nearly 1 million vehicles from this factory already. Then as we can see, the market share of Tesla vehicles by region is on an early S-curve. This is an exponential trend right here. It's undeniable that they're gaining market share in every single major region in the world. In terms of autopilot and full self-driving, they gave a few updates here. So they say, we are aiming to release FSD beta to all US FSD customers before the end of this year. Initial release of FSD beta to some customers in Canada started in March of 2022. So I love the fact that Tesla is going to be rolling out FSD beta to all of their customers in the US with FSD by the end of the year. That's just going to increase their data advantage even further. The more data that they have, the more they're going to be able to train their neural nets, and the better that the FSD full self-driving package is going to get. Now in the chart on the top right, we can see Tesla's vehicle orders as a function of time, and then the day after the Super Bowl, there was a huge spike, and I wonder why. Well, it's because a bunch of other automakers like Ford, GM, Polestar, Volkswagen, they all made Super Bowl ads for electric vehicles, and then of course, as soon as someone looks up an electric vehicle, what pops up on the internet? Tesla. So Tesla is actually benefiting from the advertising of all of these other companies because they have such a compelling product. And I just want to emphasize, Tesla did not spend a single dollar at the Super Bowl. They haven't even spent a single dollar on advertising ever. So this is great to see that they're actually benefiting from all these other companies doing advertising for them. Then in the bottom right here, we can see the continual trend of Tesla's rising operating margins. So now they are, of course, clearly the top of the industry, and it's undeniable that they just have the highest margins and they are going to be the most profitable of any major automaker. In terms of some of the other highlights, they say energy storage deployments increased 90% year over year in Q1, mainly driven by strong Powerwall deployments. And they say as demand remains substantially above capacity, growth has been limited by ongoing supply chain challenges. We are in the process of ramping production at a dedicated Megapack facility to address the growing demand. So even though they grew at 90% year over year, they could have still grown even faster had there not been supply chain issues. Finally, they show here in the top right Tesla insurance and how the safety score will affect your Tesla insurance premiums. And then in the bottom here, they have services and other gross margin increasing over time. So it's now basically at break even. Now, the last slide, of course, here is Tesla's outlook for the next year. So I don't think anything's changed. They say we plan to grow our manufacturing capacity as quickly as possible. Over a multi-year horizon, we expect to achieve 50% average annual growth in vehicle deliveries. But they also say our own factories have been running below capacity for several quarters as as supply chain became the main limiting factor, which is likely to continue through the rest of 2022. So even though Tesla grew their vehicle deliveries above 60% in the quarter, and then they also grew revenue above 80%, I think it was 81%, they could still even grow faster had supply chain issues not been apparent. As for profit outlook, they say, while we continue to execute on innovations to reduce the cost of manufacturing and operations, over time, we expect our hardware-related profits to be accompanied with an acceleration of software-related profits. And by that, of course, they mean full self-driving revenue, or FSD. As that increases, it's going to become much more valuable, more people are going to opt into the program, and Tesla's margins are going to go frickin' to the moon. Now, in terms of the product outlook, they say the pace of production ramps in Austin and Berlin will be influenced by the successful introduction of many new product and manufacturing technologies in new locations and ongoing supply chain related challenges. Factory ramps take time, and Giga Austin and Giga Berlin will be no different. And then they're making progress on the industrialization of the Cybertruck, which will come after the Model Y ramp. So the thing to take away from the product outlook is the fact that Tesla has many new product and manufacturing technologies in new locations, so this is only going to drive down their costs even further and make them more efficient. Getting into some of the photos and charts, here we can see Gigafactory Berlin, first Model Y deliveries, another one here at Gigafactory Berlin, Model Y body shop at Gigafactory Berlin, Giga Texas opening party, another shot here, man I wish I could have gone there, opening party again, then we have the Model Y body shop in Giga Texas, and then here we can see the difference between the Model 3 body structure and the Austin made Model Y body structure. So there are two pieces of metal highlighted and greater than 1,600 fewer welds. So that is unbelievable that they're able to reduce the number of welds just through the Gigapress and the Giga casting machines. And that is definitely going to drive down the cost over time because they don't need so many workers putting all of these things together. It's also going to improve the reliability of the vehicles and the safety. Now here we have some of the key quarterly metrics. So vehicle deliveries definitely grew a little bit quarter over quarter, not very much, but then if we look at the net income, this actually exploded quarter over quarter because they did have those higher margins. Then they smoothed out all of this data by looking at the trailing 12 months and basically vehicle deliveries on a steep exponential curve, operating and free cash flow increasing over time very well, and then net income and adjusted EBITDA growing exponentially. This is exactly what I want to see as an investor. I love to see this exponential growth, and it just shows how fast Tesla truly is growing their earnings. So now I'm probably going to listen to the conference call and see if we can gather any other details about that. Let me know in the comments below if you do want me to give an update on the conference call. I may or may not, but just let me know down below. Anyways, that's going to wrap up today's video. If you did enjoy my analysis of Tesla's Q1 2022 earnings, definitely drop a like on this video as it does really help me out. I just absolutely love this company and I'm super impressed with this earnings report, so it definitely gives me a lot more confidence in the company and my investment as a whole. So I will be making a lot more Tesla content up until their next earnings report, so definitely stick around if you're interested in that. But with that being said, I will see you guys in the next one.